bring in Marc Ganis. He's an insider in sports deal making. He's the founder of Sportscorp. It's good to talk to you. Welcome back to our program.
Great to be here.
How should we be thinking about this Dolphins deal, which we assume is going to happen at this point?
Yeah, the deal is very likely now to happen. It's the way you look at this is first the foundation of the $8.1 billion is the NFL itself. The NFL is not just profitable. It's not just on a continuing trajectory. It's still a growth business. There is so much more to come in the NFL. If people saw some of the plans that I've been fortunate to see for the next 5 to 10 years, Roger Goodell has got plans that he thinks that far in advance. When you start thinking about a sports league where so much capital wants to go into, it's the top of the heap. It is profitable. It has certainty as well with its profitability. You look at it and say, all right, there's a base, say $5 billion for each team in the league. And then you add to it things like the market, things like with the Dolphins. They have a variety of different businesses, the Miami Open, the Formula One race, and they execute. Michael talked about Steve Ross. They also have an extraordinary CEO named Tom Garfinkel who executes beautifully on this plan, and they keep adding assets using the NFL and the NFL facilities as the base for them. And that's what I think Aries saw here. I've spoken with some of the people involved. They saw this as more of the kind of asset that they look at, not just a sports team, but sports with other assets and growth associated with it.
I mean, you've been in the middle of a lot of these deals, bringing prospective investors together with sellers. So you're well versed on how all this works. Now that private equity is in the game, pun intended, do we feel like that's going to continue in and of itself to push valuations higher? How should we view that?
Really an interesting question, Scott, because one of the other deals you're about to see, and I think the one that will get approved first, is the deal for Tom Gores to buy approximately 27% of the Los Angeles Chargers. And that's not a private equity deal. That is the traditional wealthy person, wealthy family buying in. I think what you're going to see here is a mix. You're going to see an expansion of private equity, but you're also going to see more individuals, high net worth individuals and families buying in at these high valuations for the same reasons that the institutional capital wants to get in. The growth, the certainty, the base, and the fact that it is an industry that is in very many ways recession resistant and uncorrelated to other investment opportunities.
What do you make of what Mike said about, the next targets? That maybe the Eagles, according to the people that he's talking to, could be very high up on that list.
We keep hearing about the Eagles. We keep hearing about the Buffalo Bills. They're building a new stadium, so they have some need for some of for additional capital. But that's really those are the teams that we're looking at right now. The Chargers were one, but they're going to be taken off the table with the Tom Gores deal.
So when people look at what's happening here, and maybe they're referring more to other sports which have sort of ridden the coattails, if you will, of the NFL as it relates to valuations. They say, Mark, valuations don't go up forever. How do you respond to that? Well,
you just had Mike Ozanian on. He could tell you valuations the last decade have gone up 12.5% in the NFL, over 11% over the last 20 years. That's through pandemics, that's through recessions, that's through global financial crises. What we're finding is that sports has, there's an interest in sports that is necessary for all the new technologies that are out there, whether they be social media, whether they be streaming, whether they be linear television, of course, we knew for many years, in cable. So there needs to be content. The sports is the content for the world. And we're getting into a position here where you have globalization and digitization coming together around and into the sports world that the real smart money is seeing is going to continue this explosion in valuations.
Well, it's proving to be one of the best returning asset classes ever, especially at the very top of the cap table, if you will, when you're talking about the NFL. Mark, it's good catching up with you. Thanks for your insights. We're smarter because of them. Thanks. We'll see you soon.